Hello and welcome to NDTV Profit. You're joining us on this special conversation around the IPO of Anand Rathi Stock and Brokers Limited. Of course, this issue is set to open on the 23rd of September and will close on the 25th. The price band has been set about 394 to 414. Apologies. I have with me the management of the company, of course, Pradeep Gupta, the co-founder and vice chairman of the company, as well as Mr. Roop Bhutra, the CEO of Investments. Gentlemen, welcome to this conversation. I wanted to start with the conversation on the IPO itself. What is it that you're bringing to the market? This company is known amongst investors as a broking firm. You also have a margin trading facility that you run, both of which contribute a majority of your revenue. But for an average investor, what are you bringing to the company?
See, this is the second company which is coming in public from our group. Basically, earlier, about 3.5 years back, we came with a wealth company which is listed in a market site. So this is a purely broking and distribution company. This is one of the oldest company. We started our capital market journey 30 years back. Sure. Way back in 1994, and since then we kept on adding various different businesses, various different verticals. In this company, what we are doing, we are catering to almost all category of customer, from retail to M&I, HNI, NRI, corporate, and institutional. So all kind of a category of customers, we are satisfying the need of investments of any individual investors who are dealing with this company. And primary idea is how investments need of a specific customer should be satisfied. And having said that, it's not only through equity, but various other asset class and product from a distribution point of view, which is mutual fund, AIF, PMS, and corporate bonds, and so on and so forth. And we are trying to see how a customer really, from a long-term perspective, create wealth, generate wealth, and constantly get a return on investments on a positive side. So that's the overall theme of this particular company. Since these days now, in this company, you need, it's more capital intensive, you need capital to grow. Margin trading facility is one of the major requirement by most of these customers because of a simple reason. How a person can increase his return on investments by investing less and taking certain amount of funding on the book they have got. So that's what we are trying to do. So for satisfying the need of our company of working capital, we have come in the public and asking for our help. So this issue size is about 745 crore. Out of that, large portion, complete portion is for working capital, and major portion is going to be attributed towards margin trading funding.
Okay, understood. I'm trying to understand the current lay of the land in terms of the industry that you operate in. You've got a few other players who are listed, who currently operate in the public markets. Compared to them, where does Anand Rathi Stock and Brokers, your valuation and your position lie? If you can tell us a little bit.
So in this space, every single person is following certain amount of business rules and business guidance, and they are following that. In my opinion, there are two kind of businesses or business rules which are being followed. One kind of a company who are purely dedicated looking at market share, looking at volumes, and the second set of companies who are looking at and addressing and trying to address the investment needs of a customer. We fall in a second category. Okay. And by and large, if you really see, our company is more dedicated towards look after the investment side of any single investor. Whatever investment need by way of looking at various different product of investments, we are trying to provide, we are trying to help customers to understand the nitty-gritty of that particular product, trying to give all the input on that particular investment product, and try to bring the best basket of product before the customer.
All right. So if you want to understand margin trading facility, and that you've said that a large part of your fundraise is actually going towards that. I wanted to understand, as a business, where do you see that heading?
Yeah. So if you really look at it, I mean, the total overall market is around 1 lakh crore kind of a margin trading book from an exchange perspective. Now within that, I mean, if you really look at our data as on March 25, it's 685 crore. Right, and we have grown over a period of time. It was in 2017 when we started this margin trading facility or margin trading book from about 30 to 40 crore to this level. So we have traveled, and people are constantly asking, and requirement is obviously there on an ecosystem also as well as with our customers.
Coming to, taking that regulatory question ahead, there is some amount of talk that the regulator will look at maybe longer dated settlement for derivative contracts at this point in time. Currently, we have a weekly system. If this goes over the last year or so, it has gone through one change already. If there is another change, how does that impact businesses like yourself? I'm not asking about specifically your business, but businesses like yourself.
I think it's an operational issue. I would request Roop to answer. I can.
Sure.
But yeah.
You have very rightly mentioned that current market scenario where regulator is having worry in terms of the derivative related volumes, because there are many customers who are losing the money out of that, and the regulator is doing continuously change. One positive part which is there at our end, comparatively dependency on derivative is very, very limited, because we always focus on the investment related activities, and we try to see that how customer by way of investing can earn money out of this particular market.
Yeah.
So first important part which is there on the cash market side, out of our total broking revenue, it's contributing almost 50% part. So derivative side dependency is less.
Right.
Second side, even on the derivative side also, we generally encourage hedging related business more, and we discourage as clients to do more and more trading side, because ultimately they are losing the money. So by that way, impact on overall business will be comparatively less from that point of view on the broking side.
Yeah.
Second one very important aspect, we have diversified our business in such a way that it's not dependent on the broking itself. Currently, our broking revenue out of the total revenue is 60% and 40% is non-broking and other revenue.
Correct.
So by that way also we have reduced that particular dependency. So considering all those aspects, comparatively the overall impact on this particular way will be lesser on our business.
Understood. Looking at the way the market is, panned out at this point in time, discount broking is, of course, a significantly large competition for traditional broking houses like yourselves. How do you see yourself being competitive in that space?
So as I said, there are two different kind of a business model, where one is volume-driven businesses and one is investment-driven businesses. So when discount broking houses, so-called we say, or new age category of broking houses, we look at it, obviously they are looking at a turnover-based businesses. And as a result, their deliveries, their focus is towards trading businesses. Their focus is to bring newer and newer customer to the platform or to the investment scenario. And that's where they are trying to create an experiment. As a result, their CAC is high. As a result, they constantly work on constant acquisition side and look newer customer who are coming new to this particular business. Whereas what we are following, we are trying to address the investment need of a customer. We are trying to see how a person constantly stuck with us and constantly invest in various different investments and constantly work with us. As a result, if you really see the customer stickiness with us, 5 year plus is 50% out of our active customer base, 3 year plus about 60% amongst our active customer base. And that ratio is constantly maintaining. Why they are sticking? Because of a simple reason, we are constantly providing investment product. We are constantly guiding them to look at investments and try to see and create a long-term valuation, long-term value of their wealth over a period of time. Trying to provide them a basket of various different product, and those product which are suitable, which are useful for them from a long-term perspective. And that's what we are trying to do.
Okay. Yes, please.
Just to add to that, earlier in terms of these volume-based broking houses or discount broking houses were getting some advantage in terms of the turnover tax transaction charges which exchange was taking. That particular benefit was available to them, which has been removed by the regulator from 1st October. So post that, naturally all the brokers have come in terms of those transaction tax at an equal place. So that is the advantage which was there earlier to the high turnover, that has gone away.
Okay, I'll ask you 3 more questions. One question is regarding the environment in which we are operating at this point in time, right? Like some analyst reports are pointing out that most of the underperformance that is there in the current indices over the last 1 year or so has been because there's been a very slow earnings growth by India's corporate sector. Actually, the domestic institutional investors are propping up the market with a lot more money coming into the system versus retail, which is the popular narrative that because we have so many retail investors, the market is moving the way it is. I wanted to get your sense, as somebody who watches the markets closely, what is your sense? Where is the current Indian equity market? How much of it is based on fundamentals and how much of that is hype?
See, basically, if I dissect and I keep on talking to various different platforms, this market works on three different factors. One is fundamental, another is sentimental, and third is liquidity, right? And most of the time, I think past market, if you really see, constantly market was working on all these three factors, and as a result, we have seen a good buoyant market in past 2 to 3 years, 4 years time. Now, probably somewhere down the line, whenever there is a disparity of any of a one factor, people start asking questions. And in my opinion, I mean, you have a international the scenario of economies and domestic scenario of your economies. In my opinion, you still have a good, strong domestic scenario. If you really compare India versus any of a world country, I think India is one of the fastest growing country which is going to be emerged and is going to happen and is happening. And based on that, I personally believe this market is going to go and again take a route and look at fundamentals rather than these technical